Good morning, this is Bob Iaccino. I'm the Chief Market Strategist and Head of Research for TrendyTrade.com and TrendyTrade Pro. It is February 5th. Let's talk about the trading week ahead. We saw that huge equity market sell-off on Friday. Dow now fell over 1,000 points inside of a week. So we talk about Friday's sell-off, but it actually had begun right around Wednesday. We had a gap open lower on Thursday. We got a little bit of momentum off the open today to the downside, but as I record this right now, the NASDAQ is actually up. So it looks like the dip buyers are coming in. 10-year note yields had gone to their highest level in 4 years. They've stabilized. Now, when you talk about what caused the equity market sell-off from last week and whether that extends into this trading week or not, there's a couple of factors that come up. You got the disappointment in Google revenues, for example. You got Apple falling on the iPhone X sales. You've got the interest rates screaming higher in the 10-year note. It's not that they're necessarily at a high level, it's how quickly they went. Earlier in the year, we were talking about a yield curve flattening. Now it's steepened 40 basis points. If it settles in there, stocks will be okay. If it continues to move too quickly on the longer end of rates, everyone will start worrying about inflation and worrying that the Fed has to come in and jack their rates up at a higher level, or a higher schedule rather, than they're already planned on. So we're going to get some Fed speakers this week. And these Fed speakers will be speaking now under Jerome Powell, not under Janet Yellen. So it's going to be interesting to see this week if there's any more coming out of that, if sort of Jerome Powell's influence is already affecting the way that the speakers communicate. He has said that he wants to improve further the communication from the Fed from the Janet Yellen era, which in my opinion was actually really good. Let's talk about the FX markets a little bit. Euro still the most crowded trade, long euro, short dollar, long dollar, short yen. Those are still going to move in the same direction as we got the Eurozone composite PMI last night. The IHS markets composite, the final reading for January was the highest in over 10 years for the Eurozone. So Eurozone strength is not going away, and that's going to put a little bit of pressure on the US dollar. We've also got crude oil falling off again, another percent right now as I speak to you. Now we got an increase in rig counts again, we got an increase in inventories again last week. We'll see if that goes further into this week. Now again, the buyers of dips are coming in the tech stocks right now, and we expect that to continue. We've all been looking for a healthy correction, and that's exactly what we got. Again, with the Dow down 1,000 points in a week, that is correction territory. It's a little bit over 5% when you add in the entire sell-off, including this morning. So it looks to me like buyers of the dips are going to come in. We called for this last week. It happened. Everything for the economy, both in the US and in Europe and in South America, still very constructive for the equity markets. This is Bob Iaccino, Chief Market Strategist and Head of Research for TrendyTrade.com and TrendyTrade Pro.